Welcome. This is the January 21st episode of the Trading Pit, where we break down the Bitcoin and crypto markets with human and AI insights. I got to knock off some sounds in the background. That's a rough start. Well, we'll just blame it all on Trump. Why not? All right. Well, today I am joined by Benjamin the Well Hunter and Amit the Rain Sniper, who will answer who is going to win after the Trump token. Is it going to be another Trump affair? Is it going to be something else? We're going to find that out. We got, gosh, what is going on here? We've got Ben showing up in part 2, where he's going to be breaking down the flow report and everything that made Solana hit an all-time high and Ethereum reach an all-time low against Bitcoin, and whether those are going to return in the coming week or more. But first, we got a brand new segment, and thank God, because I just fumbled the very first part of the show. And the first part, this is going to be a round table. I'm going to be asking these guys to weigh in on a question that every single trader has on their mind at some point in time, hopefully to give everyone a deeper insight in how they can think about trading in 2025. Amit, Benjamin, you guys here? You guys ready?
Yeah.
For this brand new part. Okay. Well, after I fumbled it all right, let's kick it off. So the question this week is, how do I choose what to trade based on account size? If 100 or 1,000, or maybe you got 100,000 or 1 million. So I want to hear from you guys. You know, you've got a lot of experience coming into this. You obviously started with a smaller amount, worked up to a larger amount. How do you think size in terms of the trade size matters when you're thinking about what to trade, which assets to select, and how to think about structuring those trades? And Benjamin, maybe I'll start off with you.
I'll come in. So the first question to think of is basically, am I going to do on-chain or off-chain? Okay. Why that matters is because when you are a small wallet, you also have to think of the fees that you end up paying for all your trades. And if you are just going to do on-chain, then you don't have leverage, right? And if you were doing fully off-chain, then you have, huge amount of opportunities in one way. But the market has shifted, the volatility has come down across. So, it's gotten tricky for off-chain traders to do multiples as on-chain traders do. But, it's two different ball games when it comes to on-chain and off-chain. So depending on which one you choose or which one you can choose, like if you're based in US and half of Europe, then you don't have access to off-chain anyway, right? For perps trading and so on. And I know that even Amit is not able to access Bybit from UK. If that is the way, then on-chain is your only hope, isn't it? So this is why we've seen a lot of growth on the on-chain as well, with a lot of Telegram bots, a lot of other toolings which are coming in and trying to offer better execution capabilities for on-chain traders, including ourselves. We're trying to improve on our execution capabilities on the on-chain side using Panda Terminal, so that more traders are, able to make sensible investments, try to ape in as well, increase on volumes. All of that piles up and adds together. So if it is on-chain, let us say it is on-chain, because we all know the centralized side is starting to shrink. So if it is on-chain, now you have a lot of opportunities. You are able to do spot, you're able to do perps, for example, using Hyperliquid, DYDX, Drift. So there's a lot of options. So I think it is about one deciding what type of a trader they are, what is their goals, right? So I have $1,000. It's bull market. I want to make it $1 million, or like I want to make it $100,000.
Why shoot so low?
So depending on how much time you can spend, depending on what you are looking for using your $1,000, you have to walk back the whole process of how you are going to trade.
Well, yeah. So actually, Amit, come in here a little bit, because Benjamin, you started off saying, listen, regardless of size, you need to think to yourself, do I want to do it on chain or off chain? Amit, do you agree that that's kind of the starting point to size at all? If someone has $1,000 portfolio, a 10,000, 100,000, or $1 million, does that influence that sort of on chain, off chain part of the decision, or is there a different starting point?
It does influence a little bit, as Benjamin said, right? If you don't have a choice, as in if you are in the western part of the world, so you don't have a choice to go centralized exchanges, so you have to work with on-chain. But having said that, right, I mean, depending on, if you want to break it down from the size perspective, then you start with, if you have one, that's a general question that everybody asks, right? Because nobody says, I have $1 million, I want to go to 10 million. Those people, you don't hear anybody say that. Generally, the question is, I have $1,000, I want to make 100,000. So most of the times, it's basically, if you're on the Western side, you have to go on chain, and then you have to look for the liquidity side of things. But the way I look at things is, you need to have a smaller goals rather than going 100K. It can be grown, but that basically, what it causes unnecessary pressure on people trying to when one investment make 100x, and that's where a lot of loss happens. So if you break it down into smaller perspective, if let's say if you have a 10K account, 1K is too small, to be honest, to grow. It takes a lot of effort and a lot of discipline. So that will take long time to grow. So, but
And I think 1K, the problem is it's not even about time factor, and yes, it's going to require a lot of discipline. I think the opportunities itself will shrink because you will have to rely more on luck or some type of insider information, and this is why people end up in cults.
yeah.
Think that okay, this influencer is saying this token is going to 100x, and I just have $100 or $1,000, and I don't have enough time. I can't be sitting in the trenches, so let me throw it over there, and it will basically become 100x.
Yeah, $1,000 is basically, it will take a lot of time and patience to
Yeah.
grow. That's for sure.
So-
But having said that, it can be done. And now the question becomes, if you are doing on-chain or off-chain. If you're doing off-chain, like if you're going to centralized exchanges, then you have an option of taking a little bit of a leverage, because you don't want to do is basically do 50x and then get washed out in single trade.
I mean, in last cycles, we have seen we ourselves had algorithms and accounts where we did like 40x and so on. So it's been proven that it was possible. This cycle, it has been quite different, I would say. You don't have that type of volatility. It does seem volatile, but it's not really volatile. No, it's either up only, and then it's down only, and then it goes on sideways. The gorilla market. So the period of trending has been shrinking quite a lot. There is a impulse, and then you're basically going sideways. Maybe this is the perks of becoming an adoption market, an asset which is getting global adoption into financial markets, and this is what we have to live with. So this capacity, or the possibility of doing 100x on
Yeah. So I want to come back to, the initial question was, based on your account size, how do you think about what to trade, even thinking about assets? And you guys are really saying, what I'm hearing is like, no, actually think more about, the goals that you have, and how, and I guess Amit, think about that. I want to start with that, because that kind of leads into where can you trade, being an online or offline, or on-chain, off-chain. Amit, from a goal perspective, what do you think is something you've learned perhaps that's really informed how you think about these goals now? Because I'm kind of curious about that, because you do have people that are coming in. Benjamin, you just mentioned they come in, they see some of the historic returns doing 100x, a 40x overnight. And that actually did happen more frequently with more volatility. They see that and they now say, okay, now is my time. And it seems like that's the wrong expectation. And especially if you're trading, I'm thinking, okay, you need to actually be developing a skill, right? Rather than just relying on luck. How do you think about like what an actual goal is? Is it just setting up something? Is it return based? Is it more just, behavioral based, of like getting the right behaviors down to kind of build that up? Is it a number based? Is saying I want to take this 10x over 10 years?
I think 10x, putting the number straight away without, given the fact you're starting with a smaller account, right? That itself tells you, in a business, if you invest small, it will take longer period, and then lot of discipline. So you have to start from that perspective. So when you are building let's say a $1,000 account, the way I started is basically learning more about the market I'm trying to trade in, and not going randomly about every ticker that comes in and go after that, then throw some $100 in and see what it does. It was basically figuring out what is that 1 to 10 tokens that come up that makes that big move. What are the telltale signs of that? So sit there, observe the market, understand the market you are in, and then you can make a move. Basically, then you can adjust something. So the point being is, you need to start with a measurable metric, as in number of makers if you are doing specifically on chain, because number of metrics, there are certain things that are in your control, there are certain things out of your control. The things that you can see is the number of makers, number of transactions, the size of those transactions. If you start measuring that down, that's your starting point. That will tell you what the market is trying to do, and then you can start coming in from that perspective and say, now I understand how. Let's take Solana market. So you on dex screener, if you sit and you start looking at things, right, then over a period of time you can make an understanding of how that market behaves. What are the telltale signs of a token that is going to move into a territory where you can basically do 2 to 3x? That's the first part. And then the second part is, most of the times what happens is, you get into a good trade but you don't lock in the profits. That has, for an account to grow, that should change. It should be like, I know there will be tokens that will do 20x, but I might not be able to capture it. So that's where the discipline comes in. So I have an account, I want to grow it to 10x, but I'll start from 1 point, I'll do 20%, lock in the profit, and then see how it behaves. If it is still going up, then I'll go chime in again, and
Well-
then make another 20x, 20% on it. So
Okay.
you start locking. If you have a habit of locking in the profits, then you are basically compounding your positions, and then you have a chance of basically growing your account faster. But if you are not in a habit of locking in the profits, then it's basically wild rides. It goes up, takes your position, goes down, then you're always beating yourself up. Why didn't I close that position?
So implied in that is that there's some amount of volatility to be able to trade, right? That you've selected sort of a subset of assets that you can look at, you can study, you can begin to understand. I think both you guys seem to suggest that really anything under $1,000 is going to be very difficult. What, Benjamin, coming back to that, so let's say you've got beginner traders. What is that cutoff in your mind for the starting point? Is it $10,000? Is it above that? Is it a little bit? Mhm,
Mm.
mhm, mhm. Mm-hmm.
Whether you are a crypto trader, I think it is required. The better the tooling you have, whether it is information or execution or reporting, whatever it is, that is highly important for you to have a chance at making it as a trader.
Mm-hmm. You got to have the money to have the tools to see the data to give you some kind of edge, right?
Yes,
to be able to
because
execute that.
when I started back in the day, I used to make money and then basically spend it for infrastructure consistently. Used to burn. Like I used to, if I had $1,000 earned as a result of some service or whatever, take it, buy up a better server on AWS.
Mm-hmm.
It's fine, you lose it. But the next month, if you're doing $5,000, this $1,000 makes sense then.
Yeah.
And it gives you that edge. You're able to front run, the competing market makers. You're able to make those pips. So infrastructure matters a lot.
So, okay. So I just want to kind of summarize that a little bit. You really need, if you're going to be successful at all, to be able to build an account, you need a minimum of $10,000. You need to be investing and allocating money to tooling to give you some information so you can develop the understanding of how to see stuff, where to find the alpha that you can actually end up trading, and be able to invest in that. So you got to be thinking about, I would say one thing that's coming out from both you guys is really this more the strategic mindset learned through, I imagine, all the years you guys have been doing this stuff. I want to kind of bring this back to the initial question, and I think we can get into more of sort of our regular meat and potatoes of what we cover here. But okay, so if we know that 10,000 is the minimum, then you've got accounts going all the way up to 100,000, a million plus. There's a distinction between, are you going to be doing online or offline, or on-chain, off-chain, and really a lot of the off-chain is becoming much more prevalent in places because of the geo restrictions. That could happen even more. We just saw how Moonshot was launched. It was an on-chain for the Trump tokens, which is an interesting story. But I guess coming back to that, let's say you've got a 10,000 a minimum. Let's talk about a $50,000, $100,000 account. Ahmed, I want to come back to you. What are the assets that you're choosing? You talked about selecting 10. How do you choose those assets for that $100,000 account to trade? Which assets are the ones that you want to use?
I start with looking at the liquidity first, where I can deploy that easily so that I don't have much of a slippage and I'm not getting washed out. So first is basically what is trending, and one is what is the majors in our world. Is BTC is the one thing that will always trade, because there is a lot of volatility there, and still you can make 0.5% to 1% on a daily basis, because it all adds up. And then it becomes a game of allocation, because you can make up that money that you are spending on chain by taking a bit of a leverage on your off-chain account. What I mean is, basically, you can take your $50,000 and try to play with bigger tokens on chain, and then on the off-chain side you can make it up by taking 1x of a leverage. So then it becomes, you can offset your risk. Then you can start looking at the yields generation, but that doesn't give you much. But from the yield generation side, you can come and lend it, then again borrow it, then use it somewhere else. So then it opens up the opportunity now, because whatever the shortfall you have, you can make it up in terms of very small leverage, but not massive. But then you can start trading both ways. Then you have on-chain execution as well, and then you have off-chain. So it, in a way, it works as a hedge as well. Plus, it gives you more opportunities to make that money.
Okay, so really the liquidity profile, and then you I know you packed a bunch of other things in terms of what you're looking for, but the liquidity profile is really the top part of it. There has to be enough liquidity there to actually be able to trade it, and enough volatility to be able to trade it.
Yes, that's right.
Okay. Benjamin, anything that you would add there? Again, going back to this initial question of, how do these different account sizes trade, and what assets should they be looking at? We're talking about volatility and volume. Is there anything else that you would add to that? Is there a different starting
Capital
point?
efficiency.
Capital efficiency. Describe what you mean by that.
So when I say capital efficiency, let us talk about both options. One is the off-chain side, right? So let's say you have $100,000. I'll go from larger wallets to start with, and then come back to smaller wallets. let's say you have $100,000. Now you can basically go and buy a basket of assets, take it to Bybit, put it as collateral, and start trading pubs. Now, what is the advantage? You can basically, if you're good enough, and if you're able to make 3 or 4% a month, you are basically generating 3 to 4K of USDT, which honestly speaking, if you're in Asia, you can live like a king. Okay, that becomes your income of sort. Now you have to keep in mind your basket of assets that you have taken in will grow in time, right? If you just hold it peacefully for 3 or 4 years, it will always grow in time. And when it comes to the choice of assets, of course, it matters a lot what type of assets you choose. You need to make sure it is either a made in USA type of coins or assets which have held through time, the test of time, and so on. If you go in that, those are your good collateral. Now, you've converted your 100K as a collateral, and on top of which, you're doing lower risk rates, which are earning you monthly income. So 100K or north is a very good way for you to generate a monthly income model, right? And most people, that's what honestly they look for, and then they get greedy and then they lose it all. Now, on the second angle, let's say you're looking more than monthly income, right? Let's say you want to do like 30% or 40% a month. You still have a shot, because if you mess up, you're not taking your collateral immediately. You are basically having a negative PNL, which let's say you are not able to recover from. And if BTC basically doubles in value or quadruples in value, you'll still be able to sell and cover these losses. You have not lost your BTC and these collateral assets. So you're efficiently managing your capital in a way. Indirectly, it is leverage, but if you manage it efficiently, you can capture the upside that comes along with these basket assets, plus take a bit of a risk and try to grow your portfolio and make a monthly income, or try to 10x it as well. On the order flow side, I mean, on the off-chain side, that is how it. Let's say you have no access to off-chain side, and let's say you're stuck with on-chain. Even then, you have opportunities. Let's say you're just able to buy BTC or WETH, WBTC or WETH. Go to Aave, put it on, borrow on top of it, get 20% of the value as USDC. Now take that USDC, go to DYDX, or let's say you want to go and gamble that in Solana on meme coins, you can still do it. Now, your collateral over there in Aave is still going to grow, and eventually you can figure out a way to exit that loan and close your position. You would still not miss out the entire upside, because during the bull market, your upside will basically take care of you. And you're using the 20% capital to basically try and play your hand at meme coins or AI tokens or any other narrative driven trading. So it is much more manageable risk. It is not fully capital efficient as the off-chain side, but it is still far more efficient when it comes to on-chain side. The problem is, what a lot of people do is they allocate, and this was something a conversation I had with one of the famous influencers, a budding young trader, but a famous influencer from even the last cycle. And he was a BTC maxi, but in this cycle, he basically went ahead and allocated 30% of his portfolio to shitcoins. Now, the problem is we are not having an alt season like before, right? It's very skewed. You have different narratives popping up, and different type of tokens are basically gaining traction. So his 30% of the portfolio is not doing well at all. It's in fact terrible. And he's always having difficulty digesting it, even though he's not actively trading it. Now, why is this a problem? Is because from a BTC maxi mindset, when you're trying to go and explore tokens, and you don't have any skill set on it, and when you're relying on Twitter information or insider information, your success rate basically goes down, because you don't have a strategy. You don't have a discipline on how you're going to manage it. But if he had just taken all of that allocation into BTC and just taken a 20% of it or 30% of it as a loan, now, even if his entry was at 50K, his portfolio has grown double, and he did not miss out on the BTC upside.
Mm-hmm.
And even if his portfolio on the meme coins is down for now, it is still having value. And when he exits all of these things, he'll still be exiting at 90% of the BTC value he would have had versus the 70% of the BTC value he has now. So it is a lot about capital efficiency and how you're using the toolings, using the instruments available, even if it is just on chain, and how you maximize your returns. Like you can also do it this way. You can choose protocols which have not done TGE yet, so potential airdrops. So you try to trade in platforms which could potentially give you airdrops as a result of volumes. You can buy tokens, stake it in order to get more rewards. So there's a combination of things that you can do to make sure you are consistently growing efficient in trading side.
Yeah.
Even if it is you're restricted to on-chain.
It's interesting because as soon as you ask the question that is really kind of top of mind for traders, what assets, I'm getting into this, what assets should I be trading? Should I be going more for the blue chips like Bitcoin, Ethereum, Solana? Should I be looking more at these higher spec ones? You guys immediately start to think more strategically and around a series of other questions. Again, I think kind of arrived at through the experience that you've had over time, right? Of like trying to play in these fields that haven't really panned out. Learning how to make your capital much more efficient so that you're accessing the upside, but also being able to generate some kind of, I guess you could call it yield, right, from the trading, which is interesting. So, well, I think there's a lot here. You could summarize. You got to be more strategic. You have to have a certain size of account, 10,000 or more. Really. And then as you get higher, you got to be thinking more about capital efficiency, not just about trying to get into those high levered trades, that actually a lower levered trade that we could get into and talk about. So I think it was a good start for the roundtable. I think this is the time to pivot into getting more into the trades of the week, because there's a lot to digest there. So let's do that. Obviously this last week or last weekend really has been kind of crazy, right? So I was looking at the numbers this morning. Bitcoin was trading at 104,000, Ethereum at 3,200, and Solana at $240. And just the percentage change over last week was staggering. Bitcoin was about 8%, Ethereum about 2%, but Solana was up close to 30%. Of course, we know that was largely driven by the Trump token going gangbusters and being launched, driving all this activity. And really the interesting part about that story, besides the fact you could get into all the ethics of it, what exactly was going on, is that it was on chain. A lot of it was on chain. You had Moonshot that was doing that. And it reportedly attracted about 400,000 people coming on chain to trade, really showing the strength of being able to bring things on chain and what that can mean for good or ill. But I want to bring it back to Bitcoin, guys, because that's the question we have every single week. Last week, we were talking about some trading ranges, looking if it was going to stabilize in the 90K range. What we were looking for this week, which was coming into the inauguration, which just happened yesterday with President Trump taking over. Benjamin, I want to kick it off to you. I think we have a panda chart up here. What are you seeing in terms of strength here? Is this kind of what you were hoping to see? Heading into the inauguration, is a little bit ahead, a little bit behind, and now that he's here, what do we need to see in terms of action to really start to solidify that we have a really strong Q1?
To start with, I did not expect anything that happened in the past 90 hours ever in my life that it will happen. So it was a complete shocker, and I think it was a huge emotional trauma for a lot of traders, to be honest. Even those who made money have emotional trauma on what to think of. That is the beauty of it. So it's like you think that you made money, so you'd be happy about it, but you're not, because you actually start to worry more about it. That's what Trump token did to a lot of people. Coming back to when it comes to Bitcoin, the widely expected announcement of strategic Bitcoin reserve or anything about crypto in any of the announcements in the past 48 hours, nothing has come in. So I think there was a bit of front run with the expectations that there will be executive orders that will help Bitcoin to establish itself overall. But I think market is trying to cool off from that and wait and see how things play out. Liquidity has still come in, so it's good. I don't think there is anything too alarming, but I don't think you should just press the feet on the pedal and just accelerate ridiculously fast. Because we're still in the same ranging areas. We're still below the 108K highs that we made in December.
Can you with that, when you're saying, we're still sort of looking at a couple of these ranges, can you just highlight maybe a couple takeaways from the data you have up on the screen? I know those who watch the show frequently, just to clarify, this is from the Panda terminal. There's a lot of data in here, and I know sometimes it can be hard to digest when we're watching the show. But do want to highlight this is kind of framing a lot of the insights we're able to share. So definitely want to make sure everyone's sort of aware of that. But yeah, walk us through a little bit what you're seeing and maybe why you're kind of drawing these conclusions.
Sure. What we are seeing right now is a chart of the spot side for BTC using Binance. And what I'm showing over here, there are two metrics, one in yellow and one in red. The one in yellow is about the bid-ask ratio of the spot order book in 0 to 5% price range. And the red is bid-ask ratio in 1 to 2.5% range. If the value is positive in a good number, then it means that there is more pressure from the bidding side in the order book. And if it is more in negative, then it means that there is more of sell pressure on the order book side. Now, keep in mind that this is still intent, right? Orders in the order book is about intent. It's not actual executed trades. I know many of them know it, but I'm still reiterating in case someone new coming into the market is watching. The more positive it is, even if price dumps a bit into that zone, you have better shot at, that's a good zone to buy, even if it is a little risky because you're scared, price is dumping. But if your thesis is to the upside, you want to buy when the order book is getting thick. Now, what you see as red O's and green O's in this workbench chart basically is when you see these green O's, it is indicating that in a 0 to 5% range, you have thicker order book forming, meaning there is a lot of bidding strength that is sitting over there. So as it gets closer to the bidding strength, it's a fair shot at buying some and accumulating. Let's say you are a leverage trader or spot trader or a scalping trader, would not matter. Using Panda Intel, we are able to figure out where you have these high, thick order books. So it puts these alerts over here to say these are the points where you can buy. And the red O's are situations where you have a lot of sell pressure from the order book side. So it tells you potential places where you have to take your feet off the pedal and say, enough is enough, take a bit of profit, wait and relax and see if some better opportunity arrives. Whether you're a ranging trader, whether you're a trend trader or mean reversion, keep in mind that always when it comes to risk assets, upside is always higher than downside. So if you're trying to unnecessarily short directionally so that you can, you feel like Michael Burry from Big Shot, keep in mind that it took him like 1.5 years to basically make the money back. So it's not a strategy to basically short Bitcoin because you missed out on entering Bitcoin longs. Especially even if you were to use this red O's, I would strongly suggest to use it as warning signals to start deleveraging rather than entering shorts. That is how I would use it. And Panda Terminal makes it easy in order to identify based on various metrics to see where there is an intel. Well, so in the event section in the workbench, you can make that happen.
So I guess a question that I would have here, and we got some coming in from the audience here. Good to see Strata Trader and JV here. You mentioned we're kind of sitting here at a point where it doesn't seem like we're too overheated despite the events of the last 90 hours, which saw Bitcoin obviously shoot up on a closed Monday, right? The traditional markets weren't up, so you didn't have ETF flows. Just to add to that, the ETF flows on the Friday before were over $1 billion for Bitcoin, smaller on Ethereum, about 30 million, but a lot of kind of pent up activity kind of coming in. But when you look at the metrics you have on the screen, you're not seeing anything that suggests one way or another that we're seeing, completely overheated at this stage, kind of where Bitcoin's trading today, or that we're starting to see a buildup that's going to move to either direction. Is that right?
Yeah, what I see is that there was a lot of sell pressure as price pumped above 105K all the way to 110K levels. And then we saw a lot of shenanigans in the past 2 days to basically even quantify whether something is natural or unnatural, right? And then price fell down right into bid books near the 100K area. And then that became a plunge protection, locally speaking. And then we have seen price pop up all the way to 105K. Now, I do not have a crystal ball right here to say whether this will continue or whether we drop over here. But if you were trying to buy over here, right, I would look for more of these green O's, or let's say, let it go to a thick order book area, and you have a better shot at getting a good entry at that spot rather than waking up and saying, well, I'm in good mode, I want to buy Bitcoin and I'm buying it here.
Okay. Oh, well, I think that's good. I mean, as you said, 90 days were unprecedented. A leader of a country launches a meme coin and it throws the entire market into a tizzy. Ahmed, I want to bring you up here. You just had the analysis from a Bitcoin perspective where it sits kind of structurally, what we're seeing from a order book perspective rather. What are you seeing with sort of how you're doing your trades and how you may be laddering your trades?
So last week, this is where we discussed at this point, saying if we go above yearly open, then there is an order block basically sitting there at 108K. And there were a lot of thick order book walls sitting in the order book. We might see price play into that area. And that's how the price played up. But at this point, I was a bit confident saying, okay, price is coming down and hit this order block. Then you have this massive giant candle come up here, this one. So at that point, I was a bit confused. Basically, the point was because I thought there will be a continuation from this point onwards. But nothing, it just came back. It's an equal size candle. So the only thing that makes me worry is this sell off here into this order block. So this is the point where you don't want to see that. The way I measure this is basically, we are trying to build that metric into Panda, that's delta. As in, the way it measures is the intensity of the market orders against the sitting orders in the order book. So as Benjamin was explaining, in the 0 to 2% range, if the delta is turning to be green, it should stay green. As in, when it is trying to break the resistance, so market orders comes in, takes up all the bids, and then that point onwards, next delta should be green. So that's your continuation. But in this case, for this second candle, the delta became red, and still it is red. So that makes me wonder whether we are going lower or basically, I won't long this, not here. If I have to go again into the game of Bitcoin, I'll go above 106. If it stays above 106 and tries to move up, that's basically the point. That's a trade. But at this point, I'll wait around 96K for it to show its hand and then start laddering down.
We talk frequently about sort of the Monday, Tuesday through Thursday pattern that you've been able to trade. I think we've talked offline, maybe even on the show, about sort of the performance there, kind of an 80% plus hit rate, high profitability. Yep. When you have a Monday with the traditional markets closed, with the impact that they've had from an ETF perspective and now with an options perspective, is this a week where you kind of take a week off just to kind of see, is there still a good place to place a trade? You just talked about looking for that 96,000 range. How do you think about that from a risk management point of view?
So since the start of this year, I've stopped playing in the Monday ranges. I've started playing in the weekly ranges because that's how the market has been playing up now. So it goes in a weekly range. So the ranges are a bit broader. So that's why I just looking at the backdated data, how the Monday range are playing, and then take that data and run some analysis on top of it. So which range is more profitable or which range is working out correctly. So far in going into Jan, it's more weekly ranges that I've been playing. So if the price comes down at this level, So I would try to basically ladder in from this point to this point. So this is basically your 8% range here. So this is the range I would ladder on, but I won't touch this. So now you can consider weekly ranges as Monday ranges for the time being, because that's how it has been playing out. You can see how it plays out in a higher time frames. So I generally trade on 12-hour time frames and then go from there. So if I have to trade Bitcoin, I would wait at 96 and then start laddering down. Or if it goes above 106, then I'll start to basically come in.
And I want to double down or double click into that area where you're talking about laddering down, because I know you've talked about that frequently on this show. And I think there's always a lot of questions offline about the complexity of trying to create that ladder down. I think one of the things that you guys have built into Panda is to be able to execute this strategy. Am I correct?
Yes.
So you're able to just go in there and actually break up that order into as many kind of blocks going down in price, so that you can continue to manage that risk and increase it as the price goes down further, right?
Yes. So that's what I'm showing. If you can see my screen. So this is the no, that's not the leverage. Where you go? Where you go? Sorry. Where you go? Where you go? Leverage. That's a leverage file. Did it? I couldn't find it, but yeah, because I trade mostly on the from the CLI side.
You want to choose scale?
Yeah. I mean, you still there? You sound like you're breaking up.
Yes.
Oh no.
I can take over.
Yeah, I think we're gonna have to. It looks like Amit left the party. He was too much pressure. He cracked under the pressure.
Yeah. So basically, what happens is that, let's say you the current price is 102K, assume, okay, and you're confident this is going to do well, and you think even if it drops all the way to 99K, you want to take it up, okay. And one way to go about is basically what I personally do is range ladder, but I do it in such a way the sizing is distributed in a nice pyramidal fashion, or in an exponential fashion, we call it as, so that even if you have a volatile move like this, you're basically having a better edge, because it fills and it pumps, and you have the best of entries coming over here, because your large sizes, let me draw the line to make it a bit more easier. Let's call it as the support level. Why? Because this O that we see, the green thick order book from last night, so there is a plunge protection came in over here from, I'm assuming CZ doesn't like us to go below 100K, okay? Let us make it interesting. So CZ basically put a huge order over here and basically stopped the market from dumping, right? Now, the odds are that he filled like $1 billion over here, assume. Now, you're now confident, even if price goes all the way down to 100K, you think it will still pump up, because CZ, the god of Asia crypto, is going to protect you.
You're putting a lot of pressure on CZ. I'm just going to let you know.
with that as logic, how are you going to protect yourself, right?
Sure.
So I'm going with the perspective that this is almost a 3% range, right? Now I'm saying, okay, let me take 20 orders or whatever. So I'm choosing 20 orders. And then I'm saying, okay, I want the largest of sizes basically to come at the bottom level. So larger sizes come in over here. So it forms like a fashion like this. It's like a triangular fashion. So the smallest of orders are near your current price. The largest of orders are basically at the bottom of your price. Now, let's say I want 10% of my balance basically allocated for this purpose. Let's say I want to put some $5,000, just as an assumption. I can just buy, and it will get executed. Now you'd have, because I have some other allocation, so it's not opening up because I have other allocations. But typically what will happen is that will result in trade opening up, and you'll see a lot of orders over here.
Yeah.
What's going on?
Showing up. And since I've already allocated, you're not able to see it, but Otherwise, it will just ladder down all the way to 99K.
Yeah, and I think I'll take the blame for asking this question. I think something for all the listeners out there that you're here. I mean, I think one thing that we're trying to do is really kind of highlight some of these risk management tools, because it's something to consider. Going back to the initial part of the conversation today about how do you manage risk in this environment, especially looking at the volatility profile that we're going to be experiencing, even through periods like the last 90 hours, or maybe when things are a little bit slower, right? We're kind of moving along. How do you continue to manage that risk? It's tools like this, and you heard Benjamin talk about putting 20% of his money of a $10,000 portfolio into tooling to try and do some of that stuff, because it's so important for you to be able to effectively manage in the marketplace. And so we just kind of want to highlight stuff that's available to people and how to think about them. So I think that's a really interesting kind of it's a really interesting strategy to be able to ladder down in that way. B, it's great that you actually have the tooling here that you can do it. And it's all on chain, which means people can access it, right? There's no geofencing, if you will, that prevents people from being able to access the tools and services, which is fantastic. Amit, you back with us?
Yes.
Did you go out for a milkshake?
No, I was here. Don't know what happened.
It was CZ. He was worried you were giving away too much alpha. You were going to crash the market, so he pulled the plug on you. That's all right. Benjamin stepped in. He walked through sort of how you can ladder down. So I think there, just to kind of summarize, because I want to keep us going. We can talk about Ethereum. We can talk about Solana, maybe some other tokens. Bitcoin looks, even though it's had this really great pump over the last couple of days, we're not seeing sort of that delta as it's kind of looking at this resistance at the top end of this range. And now you're kind of looking to ladder down at a weekly range, going really around the 96 down to 90K, where people can look at kind of laddering into sort of a lower risk or risk managed trade for Bitcoin. And unless you guys have something else to talk about on Bitcoin, I say we move over to Solana or Ethereum, one of the two.
There is nothing to do on Ethereum, to be honest.
Oh, come on. Let's not be a hater.
Not really.
I think Ethereum is brewing.
Oh no, it looks like we lost Benjamin now. I guess we've got the lords of podcasting and video production just really giving us a tough ride. Ahmed, are you still with us?
Yep.
Okay, you're still here. Are we able to do a screen share with you?
Yeah, I'm sharing my
Okay,
screen.
now we got okay, so what do we got? We got Ethereum up here. Okay. So I just, for context for everybody, Ethereum gets it gets dragged through the mud right now. If you're on X or you're taking any of the public discussions at face value, there's a lot of that. And then we've got, even off chain or offline, we're talking about it, just struggling to get a floor going. And I think it reached its lowest level against Bitcoin, or revisited that level. So 6 months ago, Ethereum still, maybe it was a little bit beyond that, was still a pretty good trade just from a trade perspective. Price wasn't exactly mooning, but it was still a pretty good trade. Now it feels like it really needs to find a bottom before you're comfortable being able to put this in the rotation of something to be doing on a weekly basis. Is that accurate?
It is accurate. It's behaving very erratic. So when the market starts to move, like yesterday, when BTC was down by 0.5%, Ethereum was down by 3%. Generally, that's not the case. So generally it's in proportion. Now we had very asymmetric market where BTC was going sideways, Solana was going parabolic, and ETH was going in opposite direction. So it was it was sobering to see why ETH is behaving the way it is behaving. So that does is basically it takes away a lot of credibility. I mean, you don't have confidence, as in basically when the pressure comes, will it stand up or will it try to move, or how it will behave? Generally, the way I look at it is it's all in the ratios. So basically how BTC moves, that defines how the rest of the tokens will move. And then there is kind of a relationship between them. When initially start of the year was 1% BTC, 3% Solana, 3% ETH, and 5% Solana. So either ways, when it moves, it will move in the same. If it is moving up, the same way it will move. If it is moving down, same way these tokens will move. But now Ethereum is basically moving very erratic. You don't know when BTC starts to dump, how far Ethereum will go. So it can basically, I mean, from 3,500, it went to 3,000 within no time, and was very sombering to say. So I have no confidence in Ethereum for the time being. That's why I don't trade much on Ethereum.
So it's interesting because we talked about at the start of the show about the volume profile, right? The liquidity profile being one of the key areas to look at when you're deciding on an asset.
Yeah.
But clearly, it feels like any asset can go through a period in which it's discovering sort of its new zone. And based on what you're hearing, what I'm hearing from you, it's like you don't know what that zone is. You're waiting for it to establish a pattern to give you the confidence to be able to trade back in.
Yeah, that's true. That's exact.
Okay. So no trade on Ethereum this week. Definitely something to monitor. Interesting to hear from Ben Lilly when you bring him on here for the flow report to see if there's something brewing more at a supply and demand level. Give us a little bit more insight there. What about Solana? It just hit an all-time high. I know we talked about that. It appears to be from the Trump launch. And I think there was some interesting tweets going about how people were just taking supply off of exchanges and then using that to buy up the Trump token, and it just absolutely pumped, sort of this mega candle. How do you, I guess, we don't want to be tracing trades or chasing these crazy trades up because it can just be a recipe for disaster. How do you think about how to position at this point once you see it, kind of hit its all-time high? This could apply to any token, but obviously we're looking at Solana.
Yeah. So there is a trade that if you want to take in Solana, I mean, it is sitting at previous week mid, and then from there is an order block that I've been waiting on. So that's around 190, 180 and 190 between that. When it started to move out of that order block, specifically after previous month mid, I took some trades from this point onwards, but I closed most of the trades when we hit around 260 level at all-time high, because I thought if it has to continue, then to 260, 270 you want to see, and the price should stay above 260 for it to run up. But lo and behold, it comes down straight down, and then it's back in the range 230. So at the moment, it's a bit risky to take Solana here given what has happened over the weekend.
So are you just kind of on a cool off period until maybe next week? Are you looking for something else? Okay, it looks like we lost the other guest. Well, for all those out there, this is the joys and pains of doing a multicast with people from around the world tuning in. Hopefully you're enjoying some of the content, though. I think with just hearing these guys kind of express their views on how they're looking at these various tokens, especially after historic movements like we've seen for Bitcoin pumping, and then we have this launch of this meme token, everything dumping across the market outside of a few like Solana. It's unprecedented times. And so to hear how these guys are reacting to that, even hearing from Benjamin saying, even if you made money, you're kind of in shell shock trying to deal with that, I think is good perspective for all those out there that maybe are feeling that way and wondering how normal that is. But I think now we're going to kind of conclude that section because we've had so much production challenges. And hopefully Ben Lilly is still with us so that you guys don't have to hear me talk too long. Ben, are you here?
Sure.
Oh, now you sound crystal clear. You sound great. How are you doing today?
I am great. How are you doing?
Well, outside of the production challenges today, doing well. I think we have Benjamin kind of maybe trying to come in here, but
like you're trying to hula hoop while trying to jump rope here. It's a pretty impressive move to watch.
Yeah, it's an impressive move. At my age, with my children making me go crazy, it's even wilder. If only you knew. If only you knew. How are you kind of reacting to what you just saw over the last 90 hours? Is this? I mean, this is unprecedented. Any initial thoughts you want to share?
No, I don't know what to think. Right. I feel like a lot of individuals have been very quick to jump to form these overarching and wide sweeping conclusions about what this means for the space. And Honestly, I just don't know what to think. I'm just taking a couple steps back here. Um, I'm nodding my head as I read like some of the negative takes, and then I'm nodding my head at some of the positive takes, and I'm just like, I'm undecided here, and I don't want to form a bias either because it's just so early. But when you see kind of some of the individuals that seem to have the ear of the administration that's just came in, sometimes you have to be a little skeptical, but you can't be too skeptical because that's going to be the opportunity for the next year. So you can't just sit on the sidelines and just stew in it, right? You have to you have to realize that's where everything's going. You have to run with it. You have to find the next leg of opportunities and make the most of it. Now, some of the ethos might have been shattered, but to be realistic here, back when SBF was, being able to lobby government, he was pushing for some changes that were not going to be beneficial to the industry at large. And a lot of people were really happy to see this come into play because a lot of individuals thought SBF had their best interests in mind. And as we know, he did not. And then so when that whole kind of world kind of caved down, everybody understood that, what, he really wasn't on your side and he was not advocating for DeFi and some of the ethos that a lot of us are attracted to in the space. Now that we see, we have a real chance here for change. There's going to be a lot of people sitting on one side of the fence that are going to be there and pointing out all the negatives. And there's going to be a lot of people on the other side of the fence just pointing out the positives. And so as we sit here and watch the changes in the executive orders come through, I think it is important just to realize like we do have to have a little bit of a maturation to the space. It's going to require us to basically digest some things that we don't necessarily want to see, but it's going to be just part of the growing pains. And we'll see what comes of it. But, the meme side of what just took place, advertising wise, he just kind of showed the power of crypto, right? Like, bam, that amount of money just showed up. Yes, it extracted wealth. Yes, it just destroyed liquidity across the board. But
liquidity
then also,
vacuum,
it was a massive. I feel like Trump's drinking a McDonald's milkshake as he watches everything bleed red across crypto.
Maybe he actually created the actual milkshake. That we talk about the dollar milkshake theory. He just created the Trump milkshake. Maybe I don't know where I'm going with that. I want to hear your thoughts and really get into some of the data about the flow report, because I know you have a lot of information and there's a lot of stuff I'm very curious about if it even showed up in those reports already. But one takeaway that I had as I saw conversations on X, and again, everyone jumping to conclusions. I think something that I appreciate about you usually take a little bit of time to reflect. You're not the first person out of your chair to give a view. You want to see how the information kind of rolls in. But I saw something from Mark Cuban talking about how, well, maybe everyone should launch a meme coin. And I will say, I feel like most people still don't understand what makes a successful meme coin and why it could be successful at all. And I think probably there's also this missing understanding of why Trump could do this when perhaps another political figure would struggle to get the same amount of capital, for better or worse. And so I think that's kind of an interesting statement, not putting a judgment on it as much as observing how people still misunderstand certain levels of the mechanics that are going on here. Yes, you can talk about the extractive value, you can talk about liquidity coming out. We can actually see some of that. And then there's this other element, which is, in a lot of ways, why we talk about this space in the first place. Like, why does it matter and why is it valuable? On the other side, when we talk about Bitcoin or Ethereum or Solana, some of these other decentralized technologies and what they can do, that's very interesting. But there's this meme element to it that I think people still don't understand. And I think Mark Cuban just saying, oh, we should just all launch our own tokens, we'll just suck all this money out, I think misses the point. I don't think if Mark launched a token tomorrow, he would be able to pull in, billions and billions and billions of dollars of liquidity.
He probably won't. And if anything, there's probably going to be a derivative of a Cuban that would pop up and have more success. Because I don't think he really quite realizes what side of the fence he sits on in terms of the sentiment towards him.
Yeah.
Crypto. But
yeah,
what I would,
what were we going to say?
What I would get into is when we kind of look at the evolution of crypto going all the way back to like 2017, maybe probably a good time point, is it still showcases just how amazing it is for just capital to just show up towards something. Okay, forget for a second like what's behind it. Yes, in 2017 we had a bunch of white papers and ICOs come about, and the amount of capital that was raised and the formation of that capital within just a matter of hours was incredible. And to mark the top there was, I'm drawing a blank on the project. Is it can't remember the name. God, what is it? ESO? What is it? EOS. There it is.
EOS. Yeah. EOS.
Thank you. That sort of marked the top, but I mean, I think it was like 4 billion, if I'm not mistaken. Just an absurd amount and nothing to justify that valuation. Right. But, during that span, a lot of individuals are trying to push a lot of tech solutions. And there was a lot of tech solutions that came about that were really, interesting and innovative. And there was a lot of teams that did a lot of good work off of that capital that got raised during that time. Now, did all that work and all of that tech that got created accrue back to the token? Absolutely not, right? Lessons learned from that era. Did we make those adjustments? You know what? We really didn't, to be honest. But we continued to move down the road. And then we saw, NFTs popped up even during that time. The Crypto Kitties came about, I think, in 2017, and Mr. Dapper bought the rights to that for his flow chain. Regardless, it just showed that, now we can start to form capital off of images because they're on chain, immutable for the most part, or probably not for the most part, for the least part. But that was, again, capital formation at the drop of a hat was showing up again. And then fast forward, back in DeFi summer of 2020. Sorry, lacking sleep here, so I'm going to jumble words throughout the show. And if you can't stand it, just tune out right now.
You're the only one. You're the only one. Yes.
So DeFi summer 2020, bunch of projects coming about having to do with DeFi. Some projects raised a ton of capital, but there was a lot of bootstrapping of capital for all these protocols that showed up again at the drop of a hat in exchange for tokens. And then fast forward even further, and here we are, right? We're essentially saying, you know what, forget the tech stuff. It didn't really work. It didn't accrue value to the token. All right. You know what? All this bootstrapping of capital, the tokens got printed, but you know what? I'm still mercenary with my capital. So we're going to go from here to there to there. All of it doesn't matter too much. We have the points. And now we have just the individual themselves. And to give, some credit to a guy, God, I forget his name, but his token is called Alex. Alex M. He went on to make a platform. I think it was called Showcase.xyz, if I'm not mistaken. I can't recall, but he tokenized himself, right? It was like the most purest form of like trying to tokenize, basically his time and his efforts, and you could invest in him. And it was essentially a true way to go about, having a token in circulation and raising capital and having this influential force using the token to essentially not dictate, but, influence what he does in the real world, right? And if we look at like what meme tokens are now with influencers, you almost wish that had that component to it, but you know what? People don't really want that. Like, that's just the facts here. And so as we see memes coming about now, we see Trump, like there's something attached to it. And it's almost like the SPAC era, if anybody remembers that in 2020, 2021, it all had to do with this influential individual at the helm and what could they do? It's like goes back to like that meme from Family Guy where it's like you could have a boat or you could get this mystery box that might be a boat. And he opens it and it's like nothing. And it's like, well, I could have been a boat. It would have been amazing. Right. And we all kind of fantasize about that with these tokens. And, we're going to realize it doesn't really accrue much value over the long haul. And we'll be back to where we were, at the end of the ICO era. But where does it go from there?
Yeah.
I think there's going to be some good token design that shows up. There's a lot of good discussions taking place on DC. There's a lot of, potential work happening on like, what is decentralization? What's the definition there? What does a token having to do with governance actually mean for somebody who holds it? What rights do the holders have? Right? Eventually, before you know it, you're going to see a bunch of unfortunate lawsuits come about, and it's going to dictate what happens to these meme coins in the future down the road. It's also going to set a precedent for what's going to happen to projects that want to launch a token. And there's going to be sort of, this mean reversion where happens is the token has to actually do something relevant to what accrues value to the protocol. And what's that definition of decentralization? What rights do these token holders have that it might need to be written into the smart contract? I see that era coming probably later on in this year, but it's coming.
Let's definitely keep an eye out for that. I think we're not taking apart legislation all the time, but I think there will be signals across all the places that we usually hang out that will tell us what that's starting to look for, and maybe a position or opportunity for people to start to position themselves into some of those tokens that are going to benefit from that. We've even talked about some of those, some of the DeFi protocols.
Yeah.
Ben,
I know a lot of people are down on like the minimal executive orders that just took place, but don't let that kind of give you a sour taste over the next 30 days, 60 days, 90 days. Like there's some serious lobbying efforts going on. So, it's coming.
Yeah. Well, and that goes back to the point you were making about having a little bit of time to reflect and not being swept up in the moment. A lot of things can change very, very quickly. Ben, I want to take us into the flow report, because I'm very curious to see if anything changed over the last 90 days. Are we seeing some activity? If I think about all three of the tokens we're covering every single time, Ethereum was the good, the bad, the ugly last time. And, if I just take sentiment on X, it's even uglier than it was before. So I'm very curious to see if we're starting to see any changes there. I know we saw a little bit on the flows, but on the ETF rather flows. Solana felt like it really needed to find a different narrative. And interestingly, in the span of 90 hours, I guess, 7 days, it found one narrative and it was enough to make it pump to all-time highs. And then you've got Bitcoin with $1 billion in ETF flows coming in, which was one of the areas we were looking to pick up beyond sort of the on-chain activity. So I'm very curious to see, is January starting to show some signs of life for all three of these areas beyond what we're going to see at the headline price level? And what your take is, and maybe some of the information you found as you went through that. So where do you want to start? Do you want to do Ethereum, Solana, Bitcoin? Do you want to go a different route?
Let's just hit on Solana since it's just really, the bell of the ball here.
Yeah.
Here is a chart that's just showing fees. And I bring this chart up very frequently. And if anybody can remember, here we go into November. Solana was just absolutely ripping. I'm hoping I'm showing the right chart. Yes, I am. And even, through 2024, a lot of good activity that was taking place. And these are the fees. And then here you go. Trump drops his coin. Melania drops her coin. Like, look at this spike. Like, this was a massive spike. And now it just feels like just this little bump in the road here. And I understand that like the Solana chain was having some congestion issues, and there's even some jokes coming about for, inside conversations with Trump. But I feel like many didn't realize that was a conversation that took place with the Kraken and other exchanges way back when. But this is massive. Like the fact that the chain is realizing this surge in volume overnight, like, we don't know if that could ever happen on something like Ethereum. Like we just don't know. And we might not really ever know unless just some massive catalyst just shows up overnight. But this is impressive, right? This really kind of showcases like, Solana's strength, which is just trying to jam in 1 million executions a second sort of deal, and being that sort of on-chain version of NASDAQ. I mean, despite some of the issues that did arise, like massive hats off to like be able to see that tech do what it just did.
Is this I mean, if you look at that just data point, you said you're waiting to reflect on like the last 90 hours and really see how this starts to grow. Does this give you this sort of, okay, you got to have some exposure to Solana because a blueprint was just made for how to launch these tokens, where to do it using these kinds of tech stack. And Solana looks like it's at the front of the line to be the beneficiary.
When a TradFi individual wants to use public blockchains to accomplish whatever business they're dreaming up, what do they know best? They know stocks, they know equity, right? So when they think of tokens, they think of it as shares in a company. It's just that's just a natural occurrence for them, and that's fine, right? And you see on the horizon wrap shares coming to Solana, right? That deal has been inked. I believe they're building infrastructure. It's coming. They have the licenses. When the world leader launches his meme coin on your blockchain, is that not just the best advertisement you could ever possibly dream about for essentially future issuance coming to your chain? Okay, the world leader picked it. It must be pretty good, right? It must be decent.
Yeah.
Right? It's not just a hobby, right? This is the real deal. And when we look at Solana, it gets that sort of, advertisement from Trump, and then you have essentially TradFi in the way that they think about tokens, like their first instinct, and then you see what just happened with Trump and Solana. Why would they not be looking at doing the same thing in issuing whatever they're dreaming up on Solana as well? So, when you see that, it feels like a taste of what's to come, and it's amazing timing for its unlocks, right? If they can go ahead and just continue to grow, continue to gain users, like, can they actually overcome the unlocks that are headed their way? Like, I think I wrote there's some grayscale unlocks happening later this month, but on the actual numerical values of those unlocks is pretty insignificant, right? It's just more of like the unlocks to date have had strong correlation with price. Again, not causation. Granted, the premium that exists in that instrument, in that trust, that grayscale Solana trust, yes, that premium is going to get squashed. But once it turns negative, like the balance that exists in the trust is a drop in the bucket in terms of the size of the market cap. And more importantly, the size, a drop in the bucket in terms of what's coming for unlocks. That's what I wanted to say.
Sure.
So like it's pretty insignificant, but seeing these fees just spike like that, and whatever comes after this, you have a new high watermark here, right? Is this going to be it? I mean, it still feels like we're kind of early into this bull cycle. So could we see fees go even higher than this? It's possible.
But yeah, I still contend, or at least my mental model is that I think Trump as a personality may be one of the most memeable people on the planet, really. And so it'll be interesting to see if this is, how this is replicated. I think more people are likely going to do it with less success, but certainly I think from a Solana perspective, it bodes well in the near term for it being tooling, right? Which I think that's kind of what you're saying. I mean, the endorsement could not have been stronger. So, okay. So fees spiked to a level, hence never seen before. What else kind of is catching your eye right now from a Solana perspective?
Yields are, the staking yield is, here's Jito's dashboard. It's reflecting that big uptick in fees that we saw hit the chain, all that trade activity. You see MEV is rising as well. So that's a good move. The fact that it's just forming these higher lows that you can see on this APY chart for staking yields, that's really important. One of my biggest criticisms when it comes to Solana is like you do have this trade-off when it comes to choosing higher hardware requirements for their validators. So that reduces the decentralization because you have this barrier to entry to become a validator. And to compensate, what the validators earn for all the work that they're doing, a lot of that earning comes from just the protocol minting tokens and issuing them to the validators as they work. So you can kind of think of it as a bit of a subsidy, if you will, which if Solana's looking at its long-term roadmap and it still feels like it's still in like the first 10 to 20% of its roadmap, which they probably are nodding their head saying, yeah, that's probably about right. Or maybe it's even less than that, whatever it is. That's fine because they're still in that bootstrapping phase in their mind. And so, yes, you're going to have that subsidy to be able to bootstrap the validators, kind of get them on board, to get the users, get the fees. And then eventually the fees that get earned from all the transaction activity on chain that's happening will offset that subsidy, right? So I think it's like 95%, pre-Trump drop were being earned from the emissions of the protocol. So that's really like it's not my only one, but it's one of my main concerns with Solana's longevity, but it's not something that they can't overcome, right? Bitcoin has the same sort of criticism right now, right?
Mm-hmm.
Like where are miners going to be earning down the road? We were hopeful for DeFi, ordinals, runes, etc., and we don't really see much happening there as of yet. So it's not like it's something that can't be overcome because Bitcoin has been overcoming that rhetoric for years now. So why can't Solana do it? So that criticism, like take that with a heaping grain of salt here, because it's not going to do anything in the near term. But what we see here, like that's amazing. Hats off to what's going on with Solana there. If it can continue and build momentum off of what just happened, like it has a decent chance to overcome some of those unlocks that are happening. And obviously price responded accordingly. But end of January, if we see unlocks doing something and you see price responding a little bit, I would just take heed.
Okay.
All right. That was a lot on Solana. We normally don't cover that much. And I didn't get into lending markets, but that's okay.
I think that's okay for this week. We've got, so much going on the price side and the demand side. One last thing before we move on. Were you surprised by the fact, I think it was Bybit that put out a post talking about the fact that so much of this was happening on-chain. Moonshot, I believe, is on-chain, if I understand that correctly. That's where they onboarded 400,000 people to buy this. Was it shocking to see it happen on-chain? The whole event?
I don't know enough about that app to really tell how much of it was actually on chain. I mean, what's nice is like the tooling, especially with Privy, has gotten so good that it really, these are solutions we use for our J on chain that we have, which is going to be rebranded down the road to something else. But it's 3 clicks and you're fully onboarded, right? And if you just add in the ability to just create that fiat on ramp, okay, you just onboarded, somebody from a bank account. You gave them a wallet attached to their email, which they're comfortable with. You gave them the wallet. It's self-custody. The wallet is now funded. It's a low fee on the transaction side for Solana, and the trade can be made within seconds. Like that's pretty powerful. Like think about how long it takes to onboard to one of these TradFi brokers platforms like Fidelity. Like it's a long time. And now like finally you link your bank account. How much money do I put? How do I actually conduct a trade? Like that now looks like a steeper barrier to entry than crypto does. And so if that's the barrier to entry now, and the least amount of friction is now becoming crypto, why aren't those that are essentially younger now and more attracted to this asset class, why are they not going to choose, at least right now, Solana, for example, and onboard through something like Moonshot? That could have just been demand that's been sitting on the sidelines. We don't know. It could have been spam for all we know. We have no clue, right? But it looks good, right? It's a positive news headline. And it just, as long as it just continues momentum at the end of the day.
Yeah. Okay. All right. So we got through Solana. Are we looking at Bitcoin or Ethereum next?
We'll go into Bitcoin. Fees have been looking pretty good for the past week. Let's see. Do I have it up on my? Yes, I do. On my screen share. We kind of hit this bottom here, January 12th, 13th, and then we had a nice spike on the 20th. I believe, I don't know if the Coinbase premium showed up yesterday. It did no, it did not.
Well, yesterday the markets were closed. So is it possible? Because I think
it's still possible to show up, but it's very unlikely that it's going to show up on a non-TradFi trading day. But it looks like on the 17th was really that last day, and the 16th does that coincide with a nice fee spike? No, not necessarily, but we're starting to see something, and usually this precedes big moves. So the fact that we're seeing this nice healthy uptick, I think that's a positive sign of what's to come for the month, especially now that Trump has almost put his hand on the Bible and taken the oath. But we have ETF flows. Let's see. This is Ethereum. Let's go to Bitcoin's ETF flows. These are not going to be fully accurate, as a full disclosure. We are just tracking wallets now and just trying to track those flows throughout the day. Those in the Panda terminal chat room, you can be prepared to see soon alerts coming through there on when those flows are happening, intraday. Kind of be nice to get those alerts, but we've been pretty flat for the past few weeks. Been a pretty slow start to the year as far as how much in terms of Bitcoin has been flowing into these ETFs. We had, of course, a great Q4 here, but ever since the holidays and sort of tax harvesting season, it hasn't been looking too good. Many thought, including myself, that as soon as TradFi started opening up their emails to the start of the year, we would see a tick. Sure, we did for about a day, and then nothing since then. So pretty slow start. We're starting to see a little bit of fee activity show up when it comes to the actual network and the usage there. That tends to proceed. Some good price action to follow. So I think that's a positive sign. You can also see entity. We also broke down the AUM in these ETFs by entity, just to see who, a little more granular, sort of double click into that previous chart and kind of see who's doing what. Kind of a cool chart. Fidelity, BlackRock, that's all that matters.
Yeah, the King Kongs in the room.
Yep. Otherwise, on-chain activity for Bitcoin, there's some decent yields out there. You can see some good attention with Morpho recently going on with Coinbase. I don't think I put their rates up here. I don't know if we have Morpho and Panda yet, but these are some Pendle instruments that exist. Pendle tends to have instruments that are spanning all of DeFi essentially across chains. So if you're looking for a way to kind of earn yield on Bitcoin on chain, that's kind of your solution. As you see, there's a little bit of ebb and flow when it comes to price. Rates tend to follow, lag price. So that's why you see these yields start to rise a bit after that price made its run. And the fact that we're starting to see yields rise again when it comes to these swap rates, that's a good sign. So 7.7%, 9.4%. Those are some decent fixed rates that you can go ahead and earn on your Bitcoin. So healthy rates, a lot of opportunities coming. That's why the rates are really there. They're exchanging Bitcoin essentially for the potential for that mystery box that could be a yield that's similar to what they're probably earning on a fixed rate. That's all those L2s that are popping up. So that's good activity, fees popping up. Hopefully ETFs follow. That could probably summarize the flow report for Bitcoin.
Okay. It sounds promising. Obviously, I have to make sure that we see the flows flow through. Wasn't intended. I didn't be
surprised if we see the Coinbase premium show up at some point this week. We see some early inklings, and then when we see it show up, you should have confidence that this could have some momentum.
Well, I think everyone is sort of sitting here waiting to see what comes out today and over this next week in terms of conversation about Bitcoin Reserve, whether or not you think it's a good idea, whether or not you think it's actually going to happen. I think the discourse is going to have some impact on this, and so very curious to see what that happens. But it's good to see that from a flow report perspective, there's some promising activity. All right,
Yeah, it's almost concerning because you almost had Saylor trying to hint that he already purchased Bitcoin to try to drum up attention and interest, and it really just sort of fell flat.
Mm,
And then you sort of had a lack of announcements taking place
yeah.
relative to crypto and Bitcoin when it came to the administration yesterday. So I think there's some hesitation, and that's why we don't see the CB premium showing up right now.
Mm-hmm.
And you don't see those flows into ETFs probably today. I think everyone's waiting just to confirm that what he said he was going to do, he's going to start making progress on that front. But if he can do it, I think that not launches us, but it allows us to build momentum.
Mm-hmm. Yeah, more to see, more to check out. And I think, as you said, if you haven't already, if you want to be kind of first in line to where these announcements are coming out, you can join the Panda terminal on Telegram and get those alerts as you guys continue to build some of this the tooling out and some of the data out.
Yeah, a lot of good things on the alert side coming. A lot of things we talk about, we're just trying to program them into alerts to distribute it out easily, because that's less work for us. When it comes to actually taking a snapshot of a chart and writing 200 words, believe it or not, we're kind of lazy on that front. We prefer to build and just do stuff. But
that's right. Let the data speak for itself. Are we going to get into the gorilla in the room in terms of flow report?
Yeah,
Ethereum?
It's a gorilla. It's elephants. Yeah. It's a herd. It's a mammoth.
We're just woolly going
mammoth
size
thing. Okay, let's get into it. Ethereum, it's ugly. And I think last week when we spoke about Ethereum, we just kind of said the good, the bad, the ugly.
Mm-hmm.
And one of those kind of ugly features was what's happening on chain. Is there a lot of activity? Are the gas fees starting to creep higher? Is any of this alluding to maybe a new protocol that showed up that people are using and attracted to? Are people starting to trade again and use DeFi tooling on chain? Or is L2s, all that activity that's happening over there that we saw with the AI agent narrative, is that spilling over and leading to demand for the native token of Ethereum? And we're not really seeing much. Yes, there was a lot of activity with the Trump coin, and sure, there was like this momentarily spike on Ethereum when it came to gas fees, but we're already back down low, and typically around 10 UTC when it comes to Ethereum's gas fees is when we really see the spike for the day, and we don't see it right here. So that's not the best signs. And we have Pectra upgrade coming, and they're going to be raising sort of the limit, kind of that benchmark, where once you exceed that benchmark, the fees start to rise, and that translates to more demand for ETH for paying on the mainnet. We don't see a ton on the blob market. Go ahead.
Yeah, Ben, remind me, were you critical of that approach?
It's like I don't have like enough time in the day to dive into everything going on with base rollups and ZK rollups and using Ethereum as a data availability layer, and like what the changes to the fees are happening there. Like, I understand that Kraken's coming with their Inc. L2. That's going to be more demand into the blob market. Of course, you have Base doing what Base is doing. Mega ETH is not going to be active over there. They chose a different solution. And let's see, the Sony chain came on. I believe it was using the OP tech stack. There was a third one that's coming, or already is here, that's going to be adding more demand to the blob market. So it's sort of like you're going to have like 5, 6, 7 L2s that are going to be creating this demand to the blob market. So it's almost like they want to raise these targets in anticipation of more demand showing up because there's more L2s. But yes, I am critical because it's like, great, you got more L2s that could be demand drivers in the blob market. But how is Kraken going to bring users to his chain?
Mm-hmm.
What's the tooling over there that people are going to want? How much activity is going to really be there on day one? Like, I feel like getting a little ahead of themselves by raising this, this target right now when we don't see what these are the blob fees right now. Okay, so WEI is like the smallest denomination that you can get on Ethereum. It's nothing. It is literally less than a drop in the bucket. Okay, when we see Gwei show up, all right, good, right? You want to see more of that, and you're just seeing, like, look at how volatile this is. All right, you're jumping all of a sudden to, what was this, 327 Gwei, and then literally in the next hour you're dropping down to 20, and before you know it, you're down to the smallest denomination of Gwei before the end of the day.
Mm.
That is not a sustainable fee market. Like, this is like, if an L2 wants to run a business, and this is Coinbase, straight up, they're running a business. There's a certain amount of expenses that they have to go ahead and project into the future. And you run a fee market like this, where again, you do not have that ability to run these projections, to run your business sustainably when the market's looking like that.
Is it? Yeah. What comes to mind when you're saying this is, I'm wondering, is it just the range of volatility, or in an ideal state, right? You know exactly what that fee is going to be, and you're able to plan around that. And then there's a less ideal state where it's like, okay, it's variable, but I have a range that I can kind of map to. And then there's what it feels like what you're describing here, which is that the variation is so high. It's just so much volatility there. It's very difficult, maybe impossible, to really do those projections.
I think one of the best toolings that exist at the moment is the ability to sponsor gas fees. Okay, because if you're asking the user to go from Ethereum to Base, okay, make sure you bring your ETH over there. Oh, you have ETH in Arbitrum and you want to bring it over to Base. Oh man, this is going to be costly, right? It sucks as a user. Okay, so as a business, and you're just sitting there and you just want to go ahead and acquire users out in the real world, right? Not on chain, not these philanthropic sort of missions that people are hand holding you to go ahead and make sure that you can get this stable coin to go buy something, and then right? We're not doing that. Okay, this is a business that wants to go ahead, acquire users through traditional marketing verticals. Okay, they want to know how much it costs to go ahead and acquire a user. Okay, if it takes them $100 to acquire a user, and they can't project what the cost is for that user when they have to go ahead and start transacting on chain, because you know what? The blob market just jumped from 1 Gwei to 300 Gwei overnight. You just destroyed that model. Okay, so you can't just, when it comes to blob fees, just changing the targets and just reducing essentially the cost that's going to be accrued to the mainnet, that's not your solution you're looking for. Right? You just need to have not sustainability, but like just lower volatility somehow. Right. And I don't, and this is the problem. I don't have an answer, right? I can be as critical as anybody else is on crypto Twitter. And I try not to voice myself too much because I don't have a good solution to offer. And the problem also is, like, in order to and this is, I think, a byproduct. Well, I think this is the real issue, and what you're seeing, the spillover on crypto Twitter regarding the Ethereum Foundation, is sort of like the byproduct of this. Is sort of, people don't really quite understand, like, Ethereum Foundation and those core devs and those core meetings that take place, they're anticipating, this more demand coming, and they have to raise this target in the blob market. Fine, I agree with that, right? That makes sense, okay, on the surface. And go ahead and do that. but try to get this pricing mechanism a little bit more stable so that those L2s that do show up aren't like, whoa, okay,
Mhm.
why on Monday did it cost me this much and on Friday it cost me that much?
Mm-hmm.
Okay, now when you run a projection, you have to go ahead and create this buffer, and now you have like this upper band and lower band, and it's like, whoa, this is like very variable. Like my possible outcomes over the next year are really wide. Right. So now as a business, and you're trying to make sure that you have enough expenses for the next year, like you're trying to be conservative, trying to ensure that you can like let your market team acquire users, onboard them, and get the tooling in their hand, run education, and now have them use the tools.
Mm-hmm.
And then you're sitting there telling this business to also like, sorry, like, you know what? This is a very variable market. Okay. Guess what? You know, you want to run a taxi cab in the middle of New York City, you got to pay $9. Well, what about that meatball shop on the corner? How are they going to get users now? How are they going to get people? Great. You don't have so many cars on the road. If I like make mention of this on crypto Twitter that, you know, this pricing, this fee mechanism is great. It's like, okay, but you're going to now what shows up on those businesses? Okay. You don't have that meatball shop on the corner anymore because there's not as much traffic coming through.
Right.
Right. So what are you prioritizing is like, you know, again, I don't mean to go on this tangent,
yes.
but when we see these blob fees doing what it's doing, like this is staring you in the face, and you don't have enough demand on these L2s to drive the chart we saw earlier,
Mm-hmm.
right? You're staring at your problem right there, and we're just all missing it.
Hopefully that's something that can start to get resolved. But I guess bringing us back to sort of from a current state point of view, nothing really encouraging from a blob and a fee perspective for Ethereum. Just isn't a lot of demand right now for the on-chain usage.
There's not. And, you know, you would see some signs of it that, you know what, things are looking really bullish. Go ahead, start taking positions to earn staking yields. Go ahead and start taking speculative positions on ETH for a price rise. And what would kind of be your signal, I'm trying to pull this up right now, is again, Pendle is a nice signal for this, and we don't see things popping up over there. So here is staking yields in the white.
Mm-hmm.
This is the y-axis, so it's currently at 3.5%. That's pretty good historically for staked ETH, I believe is what this is. And it had lows that were, I mean, we're almost going below 3%. That's pretty bad. That hasn't happened historically. It looked like there was one day here in September of last year where the yields did just tick below 3%. But, you know, I feel like once you get below that number, like the incentive to go ahead and take part is gone. Right. But these other colored lines down here, this is sort of your market for yield. And if a bull market's coming in 1 month, 3 months, 6 months, some sort of timeline like that, you would want to say, I want to take a position that more transaction activities coming to Ethereum, the amount of gas fees when it comes to execution are going to rise, and validators are going to be earning more yield. Okay, you can express that by going long yield on the Pendle market. And as more traders and individuals express that trade in that market, you would see this blue line here and this yellow line start to rise. So the fact that you see them continually going down and to the right, despite the changes in the staking yield, is a sign that the market doesn't believe that it's coming anytime soon. That's not a good sign, right, for Ethereum. It needs it has, and this is like part of the problem. It's like you're have all these individuals that's saying everything's going great, right? But then you have the market, which is pure signal essentially. It's telling you straight up, I don't buy it.
Right.
All right. And you don't have that secondary response being like, what do you mean you don't buy it? Why don't you buy it? Right? You don't have that conversation unfolding. So staking yields, the swap rates, people going long yields, you're not seeing it. That's a byproduct of the gas fee market sort of being broken right now.
Mm.
All right. So when it comes to that, not good. Right. We need to see that start to rise to get bullish on Ethereum as far as price.
I was going to say, so from a fees perspective, we're not seeing demand for blocks on chain. When we look at the rate markets, we're not seeing the market start to price in an improvement in the rates.
Correct.
Okay.
Correct. And you would definitely see that, right? Look at this yellow line. What is yellow? 2025. 2025 market for Ethereum yields should be the most responsive to expectations of a bull run, right? Because you have now, from now until the end of this year, and if the market really is going to get euphoric, like this is going to translate immediately to a change in yields. And you're not seeing any movement, right? I would say, go ahead and take these long positions on yields when it comes to Ethereum. But now you have the Ethereum Foundation willing to go ahead and start staking assets, and that's just going to eat into yields even further. Yet I just don't think they're making the right decisions, but I'm only one small little, drop in the voice of crypto Twitter, and I don't talk enough.
Yeah. Well, I'm looking at some of the people in the chat here. There's rest in peace, ETH from JV. Strata Trader, what's the link to the Panda Telegram? We're going to have that in the show notes. We'll see if maybe the producer can add it here to the
and if you're in the JLabs public Telegram channel, I do believe it's pinned. I think somebody pinned it up there. No, it looks like they didn't. But it actually is the last message in there. So if you're looking for it, you should be able to find it right there.
Perfect. And then JV joking, is Sol going to overtake ETH? I'm not gonna get Ben to get into all that. There's an interesting question from Strata Trader saying, is artificially boosting demand in the blob market different from quantitative easing, where the U.S. buys its own treasuries? Maybe it's ETH's quantitative easing. I'm not sure if that's the right model way to think about it.
I view it as like deflationary in terms of like the cost to use the chain dramatically goes down. And you don't really want prices in an economy to drop really fast because that impacts like income across the board, businesses, revenues, and again, business revenues ability to go ahead and buy more goods and services, to go ahead and service future customers, right? Deflationary spirals are pretty negative for an economy. And when they fall in line with the recession, it's, that was the Great Depression. Okay. And that's why I wrote Ethereum's Great Depression not too long ago. What's because, they're allowing, block space to be much cheaper. And now we're going to see the Pectra upgrade happen. And if you don't have demand show up in the face of that deflationary event, it's not a great thing. Quantitative easing is more along the lines of, you go ahead and maybe boost the emissions from the protocol, right? So you're sort of like creating more capital, right? You're increasing the amount of money supply that exists. And usually, when it comes to QE in TradFi, that money is going to be hitting the banks first. Those are sort of your validators for your money market, if you will. And so when you think of like Ethereum, if they were go ahead and boost the amount of emissions from the protocol, and now validators are the first in line to really receive those rewards, that is sort of like your equivalent of what quantitative easing would be. That impacts rates and whatnot, which is another conversation.
Yeah. Okay. So I think Strata Trader has a good way to think about the QE, QT kind of view of the market from Ethereum perspective. Ben, what were we going to say?
No, I was going to say, I don't want to go on a tangent, but Solana is like more of a QE kind of bootstrapping early time, but Ethereum is more of like a not QT, but it's just like it doesn't engage in it.
Right. Okay. So we've kind of walked through two metrics or views that really aren't the best for Ethereum. I feel like we're down the bad or the ugly path right now. What else have you been looking at from Ethereum perspective? Is there any other data that's kind of caught your eye that you want to share?
Is there anything that's just not bad or ugly at the moment?
Or
I kind of have a lot of just like not great, right? Here's ETF holdings just going sideways. It's not been the greatest. I think this is 3.4 million. Which chart shows the entities for that? There it is. There you go. No one's really increasing except BlackRock at the moment. Everybody else has sort of been decreasing their holdings. So not the greatest signs, but BlackRock sort of runs that show. So the fact that they still have interest, that's a good sign. Fees are down, like we mentioned before. As far as like what's going on with ETH tokens, when we like to look at tokens and we like to look at the supply of tokens, we like to use this ratio that we sort of refer to as the moneyness ratio, like how much moneyness attributes does a token have, and this is dependent upon how it gets used on chain. Is it being used by sitting in a wallet? Is it sitting in smart contracts? Is it sitting in liquidity pools? Is it being used for lending? Is it using for collateral to borrow against? Is it being shipped out of its mainnet into bridges and being used essentially in quotations offshore, right? All of these contribute to how much moneyness a token has, right? Right now, the Trump token, it just got launched. It's just sitting in wallets. It's purely speculative. There's not going to be much moneyness attributes to that token yet. But over time, as it moves across the ecosystem and perhaps it gets used in various protocols on chain, it would increase the moneyness ratio. But of course, that ratio is also dependent upon how much supply is being unlocked, because that supply is likely not being used across the ecosystem, right? So it's sort of this ratio that exists that we like to look at. It does do well for us. You can see this ratio right here. This blue line is the price of Ethereum. I can kind of zoom in a little bit just so you can go ahead and get a better view of it. But you can see it sort of topped out early November. And since then, the ratio has been declining. There's just various versions of it, but they're all doing the same thing. They're just not going the right direction. And prices also moving in that similar direction. So when we look at, what is impacting the moneyness of ETH, we can kind of first look at how it's being used in the most basic sense of being staked on Beacon Chain, or is the liquid staking tokens and the liquid restaking tokens, how are those being used on chain? Are they going to illiquid forms of usage as well as just sort of basic ETH being used? In this chart, it really shows that the main contributor at the moment is just a lot of ETH being unlocked from Beacon. We kind of saw that trend playing out in December, right around mid-December. It hasn't slowed down yet. Last week when we talked about that, I believe that was the good. That was the sole good mark on ETH supply at the moment. And it didn't gain any momentum. You can, if you actually zoom in, you can kind of see there was like, oh, you know what? There's a little optimism right here, and then it just sort of fell off. But zooming back out, this is other versions of ETH. You can see that people really like to use restaking tokens to probably earn even more yield, byproduct of low staking yields. But yeah, not good there.
Yeah. So yet another.
I'm sorry, I'm not showing you the right chart here. Here it is.
Oh, here we go. Okay.
Man. So yeah, here's that zoomed in look that I was.
It's kind of coming down
to. Glimmer of hope was right here last week, and then we just kind of continued to drop down. But yeah, we were sort of slowing down at the start of the year, right? Big decrease into December or November into December, plateaued at the start of the year, and kind of trading back down ever since.
So,
go ahead.
Okay, so I think we've kicked this poor animal as much as we can. There's nothing really great to talk about from Ethereum perspective right now.
No,
Right.
not really.
Okay.
Unfortunately, I mean, I'm even looking at protocols that are showing like changes in the amount of ETH showing up on their systems, and there's really nothing crazy. Aave just continues to dominate along with MakerDAO, and Spark is part of sort of that MakerDAO network, and it's got a little bit of an uptick. Fluid, I think that's like Instadapp's Fluid. It's sort of losing its time in the sun of late. How stables are used on ETH is another thing we looked at, and it's sort of just a similar story.
Down and to the right.
Am I looking at, this is 1.2 billion, so this would be let's see, Aave is your big winner. When I take Aave off of this chart, you can kind of see we're not doing anything crazy, but just Aave just continues to just dominate everything at the moment. So hats off to them. But yeah, summary, supplies looking terrible, even for protocols on ETH outside of Aave. Not much gaining traction at the moment. Fee market looks like garbage. I want to be optimistic. Everybody knows that's listening right now knows how much I want to be optimistic on ETH, but it's just ugly at the moment. And I jump in here because I wanted to transition to one last point before we kind of wrap it up. Jump in.
Yeah, I think one of the reasons we look at these flows is to have a clear-eyed view of what's actually happening with the networks, giving us perspective if it's moving in a direction that's going to eventually be accretive to price, or if it's going to perhaps show us more of a flat line. Clearly, everything today, we know what direction that's going. I think one thing we won't have time to spend today on is there are catalysts that can change this with time. Changes, at the foundation level and what it's signaling to the market. Changes where the market's actually coming back, as you said, on the Pendle side of it, and showing that more people are starting to speculate. That's actually showing that momentum's happening. Changes at the government level, where they start to talk about what they would like to see from a guidance perspective, regulatory perspective, and being able to give out clarity that could help a lot of these DeFi protocols, I would say, come out from the shadows and be able to operate. And that could really be yet another boost. And part of that could be looking at how yield coming from staking could be applied in an ETF kind of situation. So I say all that because all that's speculation on which of those is going to happen, how that's going to transpire, if it transpires at all. But there are things to be looking for that I think we'll continue to look for here to see if that's starting to change and how it's being reflected in the flow report.
We will. And honestly, you mentioned potentially staking yields coming to these ETFs, these instruments. That's really the main catalyst at the moment. If the catalyst does hit, there's definitely going to be spillover that hits across the network, and people are going to get excited. And hopefully that translates to some good product market fit showing up on L2s. But to be absolutely frank, it's kind of hard to get excited at anything happening, within its own ecosystem, especially on the main net, that's acting as like a possible spark for future price appreciation. I mean, you have a video coming out, I believe, later this week. It had to do with a thread that we were looking into regarding Athena, and how those that hold ETH, if you think of like this opportunity cost, if you have this sort of yield that presents itself between 20, 30, 40%, and you get no price appreciation in the underlying asset. So we're referring to, staked USDE here. So you give up your ETH, okay, ETH might double, right? But, sentiment wise, people don't think that, that's for sure. And you're willing to go ahead. Are you willing to accept 30%, yield on a stable coin? the market says, yes, give me that trade-off. I will take that all day long. And billions have flowed into that trade for good reason. It's been the right move to date. And so on this chart, I'm just kind of showing these are Pendle instruments that exist on USDE, staked USDE, right? So you can go ahead, you can take your ETH, you can be on Pendle, you can make that swap into this position, right? And you are essentially selling ETH to take this stablecoin position. And you can do it with USDC as well. And you can see the yields right here. So down here in October, about 14, 15%. But then when we go ahead and, Trump gets, wins the election, we see the yields start to spike. And we see them run all the way up to almost 30%. And that's a pretty good chunk of change. And then we're seeing it now kind of plateau around 20%. What this chart doesn't show you is just how much capital was flowing into Pendle during that time frame. Right, I kind of mentioned that Athena sort of acts as this, like, it suppresses the upper bound for any price appreciation on ETH. And that's just due to the nature of how they create this synthetic stablecoin position. So here's Pendle, and you can see the uptick in the amount of TVL showing up on just this instrument that expires in March. It holds, I think, there we go, right at the top, $167 million of value sitting in this instrument. Very successful. Okay, so the end of October, all the way kind of into that first week of November, you saw it rise very rapidly, almost 100 million showing up in a matter of just a few weeks. And if we go back to the chart that's showing ETH compared to Bitcoin, you can kind of see in this red box, that's actually the same time frame, right? That's when things started to look not so great. Yes, the election hit. ETH had a nice little rebound because everyone thought it was probably overly down compared to the rest of the market. So there was some beta, but it turns out people want to yield more, so price starts to eat away. And then you have from kind of during the span of end of November, you had a little bit of relief on that rally, and kind of coincides again with the changing TVL just in this one instrument. And I know in the thread on Twitter, when we went ahead and we dove into like looking at some of the flows to centralized exchanges and how much might be responsible. And it's definitely not all Ethereum, right? I think at one point I was saying 40 to 50% of that flow is likely attributed to Ethereum, and the rest was probably Bitcoin at that time. But just relative market caps, it has a greater impact on ETH. And so when you kind of just line them up, they have strong correlations. It's just hard to ignore. So what's interesting here is just, and I find this almost ironic, is sure, like people want the yield. Athena's being built sort of on Ethereum, but not really. It's got a lot of centralized components. But you have Pendle that is just enabling this entire thing, and it's like the greatest success story of Ethereum for the past year. And it's just like, wow, your two greatest use cases as a network is extracting, yield out of your native token. It's ironic. So I'm going to end the show because we just sort of did the bad, the ugly, and the ironic here.
The ironic. Sounds like another episode of the great Clint Eastwood film. And for those who haven't seen that film, you definitely need to see it. It's on my top 10 list. So, well, Ben, I'm hopeful that we're going to see some changes on Ethereum front, mostly just because I'd like to see something that's been so beaten down to make a change and to get back to some strong fundamentals that really are driving demand. And I know you've talked offline just about sort of the strength of the network and the tooling that it's built. It's unparalleled, really. And it's really doesn't feel like it's getting any of the credit for that right now, for real reasons. So definitely want to continue to watch this, come back to it, and just sort of see how that kind of see how we progress. So, but with that, we're going to wrap up today's show. I know everyone, apologies for all the hiccups. We definitely had some challenges from a production standpoint. Not always easy when you got a global team and dealing with some of that. But hopefully you'll come back next week. Bring back Ben for the flow report, and then we're going to be doing our second iteration of the Trader Talk. If you've got questions or ideas, leave them in the chat. Leave them in the show notes. Let us know questions that you have that you'd love for to hear about. See what questions we can get in front of these guys. With that, I'm going to leave you with my PSA. You know what I always think? You should have some dry powder. You never know what's going to happen, be it in Ethereum, Solana, or somewhere else where you're going to want to be able to deploy it. But have that ready. And with that, this is Marconi White signing off.